Hey folks, it's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also home to the best MJ community and the channel that was created by a retail investor for retail investors. In today's video, we're going to be discussing the bloodbath that took place on MSOX and the entire MJ industry after a brutal day yesterday. Today is Thursday, it's November 7th, 2 days after the presidential election, and we're still dealing with the aftermath. If you haven't seen my video yesterday, you can check that out. It was live coverage yesterday when the market did open. But I wanted to dedicate this video specifically to MSOX ETF, which is a leveraged ETF. I have a lot of people asking me and who have asked me in the past, and still to this day ask me, how come I don't own MSOX and how come, I don't talk about it. So I'm going to discuss all of that and more and how we need to be cautious with these type of leveraged ETFs. It's that degen mindset, that instant gratification. People just want everything now and they don't want to wait. And that's not really what investing and the stock market is about, right? You need to be patient. Like Warren Buffett says, the stock market is a mechanism from transferring wealth from the impatient to the patient. And when you introduce these leveraged ETFs, it's literally just going against the ethos of what investing really is, right? And it comes with its whole slew of issues. So, I see people all the time getting involved in MJ, getting involved in crypto, and they're throwing, thousands and thousands, if not hundreds of thousands of dollars sometimes at these MJ stocks and these cryptos, and they don't know the fundamentals. They don't know, trading and investing 101 fundamental and basics. And that you absolutely have to do that. I mean, this is your hard-earned money here. And, it takes not very many people are successful at investing or at trading. And just like when you go to be a doctor, right? Not very many people are successful at becoming a doctor, but you have to study and study and study and spend tons of money before you even make $1, right? So it's the same thing applied here, right? There's no shortcuts to life, but we'll discuss all of that more, my thoughts and opinions on this. I did actually buy MSOX ETF, but we'll go over some of the risks that it poses and some of the benefits. Before we do, make sure to smash the like. It helps support me in the channel. If you're new, you can subscribe. Tick the bell, you'll be notified on any future videos or when I go live. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. And as always, this is not financial advice. This is for entertainment purposes only. Never buy or sell anything based on anything that I say or write. And like I said, I did buy MSOX yesterday a couple of times. My first ever and second ever purchase yesterday, once early in the morning and then one late in the day. So I have an average of about 92 cents. It's just a quick trade, and I'll go over my plans with that in just a moment. If you haven't gone to powmerch.ca, I released a bunch of new products as well. I actually just ordered this one here. I can't wait to get this MSOS shirt. Made it not too long ago and getting a lot of great feedback on the merch, and a lot of people ordering and really enjoying the quality of the product. So I really do appreciate all of the support. So we'll go over understanding leverage in MSOX. And you don't have to go into all the full details. It's just a high level overview. So MSOX uses daily leverage that is intended to offer magnified exposure to US MJ sector. And like, what is wrong with that sentence? Magnified exposure. Like, you're in one of the most risky sectors and industries, and you want to magnify your exposure. Like, it's just, again, it goes against the whole point. Like, you're in one of the most riskiest asset classes in the planet, in sectors. Same thing with crypto. I see people all the time. They're using 50x leverage and 100x leverage, and they lose all their money. Like, you don't need to invest a lot of money, and you don't need to use leverage, right? There's enough opportunity here to be excited about, and you don't need to break the bank and, risk your whole life savings, right? You can easily get a 50x or 100x in this industry, and same with crypto. You don't need to invest, millions of dollars or hundreds of thousands of dollars. Maybe if you have a net worth of, $10 million, you'll invest $1 million. But, at the end of the day, most people are breaking the golden rule, investing more than they're willing to lose. So with trader leverage, it's important to understand the effects of compounding. MSOX is designed to track the performance of MSOS for only 1 day. And they did say that they waived the fees on it, so it's not double dipping. But due to the compounding of daily returns, holding periods of greater than 1 day can result in MSOX having returns that are significantly different than the return of MSOS. And I shared this in the Pow Group private community today with private members, actually yesterday as well. But you just have to be very cautious, right? You're using leverage. That means even more risk. And like I said, there's been enough people damaged from how risky this sector is. So triple leveraged ETFs like, what is it, SQQQ or SPXS, or just leverage ETFs in general, they come with considerable risk. So they're not appropriate for long-term investing. And that is because, like they mentioned, compounding, and that can cause large losses over time. These leverage ETFs during volatile markets, they can see huge drops, and they're using derivatives, right? So they introduce another set of risk. Since they maintain fixed level of leverage, these leverage ETFs usually face complete collapse if the underlying index declines more than 33% on a single day. And even if none of these potential disasters occur, these leverage ETFs have high fees, and those can add up to significant losses in the long run as well. And if we just scroll through their holdings, you can see all of the major US MSOs. But if we go down to the bottom, you can see here derivatives collateral and BlackRock Treasury Trust, derivatives collateral, Clear Street, and Nomura. I think that's how you pronounce it. So, it's very risky. And generally, the thesis is since it's leverage, it's usually about 2x, right? So if we look at the day today, if we scroll down and we look at MSOS, it's up 4.33%, and MSOX is up basically double, 8.79%. And sometimes there's some discrepancies, is not exactly double, right? And that's because they're using those underlying derivatives and compounding to achieve that. So why did I take a position in MSOX, and why don't I buy MSOX for the long term? Well, again, what I just said, right? The fees, I can go and just look at their holdings and buy this. Yes, it's actively managed, and they switch the share count around and whatnot, but I can just go buy the top 5 holdings and wait 10 years. That's also an option, right? And then you got to pay fees on top of that, right? Like trading fees. To buy the ETF, right, on your broker. So, sometimes they charge you 1-2%. Sometimes it's $5 per order, $10 per order, right? And that's every time you buy and sell. So you have to factor that in as well, especially if you're trading and it's a lower amount. But MSOX, the reason why I didn't buy it long term is because there's enough risk. I don't even own that much MSOS ETF. I own mostly just individual names, and I've been holding off on the MSOs because I figured that I would get a better price. And after the bloodbath yesterday, I was actually able to pick up, I almost doubled my Cureleaf holdings, and I also added some MSOX for a trade. So my average is 92 cents. I'm currently up about 10 cents on that position, and it dropped as low as 84 cents actually yesterday, the low of the day. So we're already up 20%. Actually, from the low of the day to the high of the day today, we're up over 23% at the moment. So the reason why I don't invest in MSOX long term is because, like I said, those high fees, and then because of the underlying risks that it poses, right? And if, like it said, if the underlying index that it tracks is, in this case, MSOX, like yesterday, how much did MSOS drop, right? From the high of the day on Monday to the low, on Tuesday to the low of the day yesterday, we were down almost 33%. So that's exactly what I said earlier. Whenever you see a decline of more than 33% in a single day. So we have to be cognizant of that you could potentially lose all of your money. And just look at the amount of volatility, right? Like I see people who are commenting on my videos and, direct messaging me and saying that they only own MSOX. That's all they own. It's just like YOLO, go big or go home. It's just like, it's such a bad way of approaching things, right? You don't need to, like I said, invest your life savings, and you don't need to pick the highest risk option in an already extremely high risk sector. So look, in just a matter of a few days, it's down 63%. If we go to the high of Wednesday, October 23rd, to the low of yesterday, it's down 70%. There's a lot of people that aren't going to recover from this. Most people can't handle 60, 70% drops in a very short period of time. In this case, just a couple of weeks, people saw, their holdings go, and they might have even bought a lot higher than this, right? So they could be down 80, 90% in a relatively very short period of time. But in a week or two, to see your entire portfolio and holdings go down 70%, that's really hard to stomach. So a lot of people probably won't come back from this. Whereas, me having, a lot of Canadian LPs and exposure to individual names, my portfolio yesterday was only down about 15 to 20% on, like, as a whole on average. And to be quite frank, it was up about that same amount over the last couple of weeks anyway. So I'm basically back to where I was a couple of weeks ago. And then I added MSOX for a trade. So I was looking at $1, right? Just from the high of the day on Tuesday to the low of the day yesterday. Like I said, we were down 62%. So I'm looking at that and I'm saying, okay, we're coming up on $1 psychological. If we get close to $1, I was going to I added close to $1, and then I added again down around, I think it was like 84 cents, or sorry, 86 cents that I filled. It dipped to 84, but I think I filled it like 86. But anyway, my average is around 92 cents. And the plan is I didn't use a lot of money, right? I didn't break the golden rule. I didn't invest any more than I'm willing to lose. And it's a complete YOLO trade. It's zero or hero. I'll hold it until this potential gap fill here. And look, if we just go from where we are now to the daily EMA 12, that's about an 80% move from here, right? So my plan is I didn't use a whole lot of money. If it went to zero, I wouldn't care. But also, could potentially see 100 to 200% move in a relatively short period of time. So if we start the daily bounce tomorrow, where it's a daily inside bar, which was the most likely scenario based on how big the range was yesterday, if we start that daily bounce tomorrow, we could come up here and fill this gap. Even if we fill the gap there at $1.68, that would be huge gains, right? So my average is 92 cents. And if we fill that gap, that's about a profit of about 83%. So again, only do this if you're willing to lose that money. You're not breaking the bank, you're experienced, you know how to trade leverage, you know how to trade in general. Like I said, it's very risky using leveraged ETFs. And, sometimes ETFs are less risky, right? People view them as less risky. You just buy an ETF and hold it. You don't have to manage it. It's kind of managed for you. But, that can be true, but you'd have to pay fees. And then when you use leverage, like I said, a lot of people end up getting wrecked. And yesterday, I seen a lot of people who were very frustrated, angry, emotional, sad, depressed. And you have to really do your homework, do your research, and don't just come in and throw thousands and thousands or hundreds of thousands of dollars without understanding the basics, the fundamentals. How much hours did you spend before did you use paper money, right? You really have to be cautious. And if you're not experienced, you can really get in trouble. Kind of averaging down and things like that. It's great to dollar cost average and average down, but there has to be a method to the madness, and you have to know what you're doing. You have to adjust your position sizes accordingly and account for that risk, because there's always going to be massive risk when it comes to MJ, when it comes to crypto, when it comes to investing in general. But these are the two highest risk sectors. I would say crypto's the riskiest, and then the next risky would be MJ, right? So you don't need to use all this leverage. You don't need to invest your life savings and your whole, put yourself in debt or take loans out or something like that, right? Just invest a little bit by bit, and wait, right? The stock market is a mechanism from transferring wealth from the impatient to the patient, okay? And the golden rule: never invest more than you're willing to lose. All right, going to end it there. Let me know your thoughts and opinions in the comment section below. We're going to end it there. I'll keep everybody posted on my trade. Like I said, I'm looking to at least hold it until that gap fill. And it's a smaller position anyway, but then I'll be looking to rotate it out of MSOX. Just a very short-term trade, not holding it for a long time, maybe a couple months at the most. And then I'll be looking to rotate out of MSOX back into some individual MJ names. All right, enjoy the rest of your day. It's Rod with Power Group. Thanks again for joining us in the Pursuit of Wealth, and we'll catch you on the next one.